Okay, 18th of February, Rudy here. Welcome to the Daily Investment Show, where I go through the ASX US indices, subsectors and commodity prices, looking for places to invest money. So ASX 300, we're up a bit today, led by the financials, who was up a bit. We're outside of the dome, but we're at resistance levels here. Very long term resistance levels. So it's going to depend on what this guy does here, CBA, who's sitting right at resistance. The material sector, XMJ, so still just consolidating, but no resistance levels to worry about there. The materials over financials, so we've had materials outperforming, so now the financials have been outperforming since January, really. So if that was a share, you'd say that's coming back to a support line, which means maybe switch some your financials for materials, because there's a long way to go, I reckon. $10 a month, join the channel, do ASX and US ETF shares, all in this space, the materials focus, energy focus. Speaking about energy, our energy sector, just looking magnificent. Hasn't broken out yet. I think it will. Our tech sector, XIJ, so we're having a bit of bounce off support, so probably worth having a punt in there, I reckon, at the moment. The consumer discretionary sector, so we look like we're in for a bit of a bounce there. I don't expect this to make all-time highs, maybe a bit of a rally, sort of been oversold due to consumer stuff, worries about interest rates, etc., which is still true long term, which is why this won't keep going up. A health index, so we're trying to make a bottom, so that's obviously led by this guy, CSL. Okay, over in America, so we're just sitting there at that 20-week moving average. I showed the short positions yesterday, so there's a high lot of shorts, which probably provide some sort of support. So the Nasdaq's flat, so the mags. So in terms of this whole US market to perform, these guys, they're 45% of the net, so they're basically the stock market. These Magnificent Seven. So they are capped by the dome, but they are at a support level. So yeah. So the S&P 500 over the Nasdaq. So you can see it's not the, so that's why you got this battle between those big boys and the other non-big boys, because you got the S&P who's doing all the heavy lifting, the non-Nasdaq stocks. So our material sector over the S&P 500. So our material sector has been outperforming. That's where all our ETFs are sitting, in these things, US ones too. So Amazon's right on a critical support line there. Nvidia still chilling. The financial sector on support over there in America. The energy sector, oh yeah, this is a new one for you. So this is the XLE, which is this index. And you can see the short interest, so everyone's short the XLE. You can see back here, marked the bottom there. Didn't mark a bottom here. That one marked the bottom, and that one was sideways. So it's always good. It's always good to be invested where everyone's short. I know that logic doesn't make sense. And this is my favourite ETF in that space. So it's not the XLE, but join the channel, you can find out. So the energy sector over the S&P 500, so it has started outperforming. The global gold miners are still in an uptrend. So the gold miners over the S&P 500. So look at that big juicy bottom there. Boom, 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 boom. Okay, settle down already. XLY. So this is consumer discretionary in America. So similar to ours, they're due for a bit of a rally back up to resistance. So the mid-cap sector in America, so that's looking quite bullish. If we do the mid-caps over the S&P 500, so we can see mid-caps. So you got S&P outperforming NASDAQ and mid-caps outperforming the S&P. So you can see it's the middle boys doing the grunt. So your super fund was flat today. So a materials bias to your super fund would have you outperforming. That's what we do here on the channel. $10 a month. VGS, the old favourite VGS. So material focus over VGS, you'd be still doing well and will continue to do well. The US dollar, so we're trying to eke out a bit of a bottom here. So it really needs to clear 98. But again, it's one of those everyone's hated, so it'll probably go up. The Aussie dollar, so we're struggling at this resistance level here too, so obviously waiting for the USD to give us direction. Gold, oh yeah, someone asked me yesterday about, I showed that gold here, so the US dollar's declining and the grey is the gold. This is reserves, central bank reserves. So I found, so the top 15 buyers added 2,000 tonnes. China alone added over 3 tonnes. So these are the countries. So China was the most. So China, Poland, Turkey, India, Brazil, Japan, Thailand, Hungary. So they're not the Western countries, which makes sense. Get away from that bad boy US dollar. Okay, so how's gold doing? So it's just chilling. You could argue that is actually, well, let's put it in. Don't be biased, Rudy. We could argue that's forming a rounded top pattern, which could be an A, B, C correction. Yeah, 1, 2, 3. So my feel is it's just going to do this for a while and then break to the upside. Okay, so this is the gold miners over the gold price. So usually the miners should outperform the gold price, but you can see here the gold price has been, you've basically made more money investing in gold than the gold miners since 2002. So you can see here, so basically in 2016 the gold miners started outperforming gold and they got this big base. So I reckon on the next break up of gold, the gold miners are going to rip. So Aussie dollar gold, so we're just going to follow Bitcoin, trying to probably No, I don't touch it, but that looks like it's a bottoming port formation. Silver, my girlfriend, so she just looks sexy. That looks unbelievable. Palladium, so palladium looks fine. Copper, go to a weekly chart. So copper, it's fine. I mean, it's an ugly shooting star there, but consolidation, it's all the, because we're not directly invested in copper, it's the copper miners. So once copper prices find new floors, then people can upgrade earnings. Oil, so still hasn't broken out. Just chilling. Oil over the S&P 500. This is one I'm watching. So a breakout in oil price, I'd say, would be a breakout in the S&P 500. So who would have thought of that, hey? Investing in just oil to outperform the share market. Full of shit, Rudy. Iron ore. So iron ore's coming off. That's alright. It hasn't broken support here. Lithium. So having a bit of a pullback. Uranium. Finding a bit of support there. Uranium stocks did well today. Okay, coal. Oh yeah, another stat for you. Full of stats. Okay, so this is primary energy consumption by source, China. Back to the 1970s to now. Coal, oil, gas, hydro, wind, solar, nuclear, other renewables. So quite often you hear things like China's solar generation has increased 25%, like to make it, which it has, like it's, if you measured it from here to here, percentage growth is quite big. But put it into the big picture, once you start hearing 1,000% growth in solar, then maybe it'll take over. So they're still using coal and oil. Don't believe those greenies. Anyway, that looks fantastic too with that. Thermal coal, coking coal, giddy up. Aluminium, finding support. Tin, so tin's having a bit of a consolidation. It's fine, it's not bearish. And then a little fun one, soybeans. So soybeans, we'll watch it, see if it breaks out. You can actually buy this as an ETF. Alright, that's your daily wrap. See you tomorrow.